Right. Hello, everyone, and welcome to another quarterly webinar brought to you by Apollo Capital. My name's Tim Johnston. I'm Managing Director, and as always, it's a pleasure to be joined by Chief Investment Officer Henrik Andersson. Hi, Henrik.
Hi, Tim.
So today, as usual, we will bring you an update on everything that's happened over the last 3 months or so in crypto markets. We understand that many of our audience are family offices, professional investors, institutional investors that are focused on traditional assets. There's obviously always a lot going on in those markets, so it's our role to bring you all the key events and news to keep you abreast of what's going on in crypto markets. So that's very much the purpose of today. As usual, we are delighted to see some questions come through. So please, I think there's a Q&A and a chat function. Please fire your questions. It's a great opportunity to ask Henrik directly. Please also feel free to ask those questions early in the webinar. Sometimes they come all towards the end, but ask them early and I can ask them throughout the webinar. Today, the usual disclosure, today is not financial advice. It's just hopefully an informative and helpful discussion on crypto markets. But I'll also share my screen and just provide a bit of an introduction to those that are new to Apollo Capital. So Apollo Capital is a crypto asset fund manager, predominantly based in Melbourne. We have people in Canberra, Sydney, Amsterdam, and Dubai. So we started in 2018 with the Apollo Capital Fund. The Apollo Capital Fund is a multi-strategy fund that invests in Bitcoin, Ethereum, and a couple of the other funds that are available to investors. So those other funds are the Apollo Capital Frontier Fund and the Apollo Capital Opportunities Fund. The Frontier Fund is more focused on new projects. We sometimes describe it as liquid venture capital. So more volatile than the Apollo Capital Fund, but hopefully more return potential as well. And the Opportunities Fund is our market neutral fund, predominantly focused on yield farming and generating income type returns. So short story, we invest really right across the whole market of crypto markets. We've been doing that for a little while now, 4.5 years in Apollo, and a little bit longer in our own personal capacity before we started Apollo. So there's a bit of an introduction on Apollo. Henrik, what's been going on in crypto markets?
Yeah, a little bit less of a dramatic quarter than in Q2, I think is worth mentioning. Going back to the funds that you just showed, Tim, as well, maybe worth mentioning that we opened up the Frontier Fund and the Opportunities Fund for Australian wholesale investors during Q3. So we're very pleased to offer those funds now for Australian wholesale investors as well. But yeah, going back to the quarter, definitely less dramatic than in Q2. We saw extreme volatility. I do have some slides, so maybe we can go straight to those slides. I can try to share my screen. I think you have to probably do that from your side, Tim.
Let's go. I'll share my screen. I've got them ready, and we can just
fantastic.
Jump into it. I'll start the slideshow. How's that looking?
Yeah, I can see the slides on my side, so looking good. So starting off with a little bit of a summary of the market in Q3. We saw Bitcoin slightly increase from the level in beginning of July. Worth mentioning there, I think, is that Bitcoin and Ethereum are down around the same levels from a year ago. I looked this morning from a year ago, both Bitcoin and Ethereum are down 61%, which is very unusual. In a bear market, usually Bitcoin is doing significantly better than other assets. We saw on this slide as well, we saw that the dominance of Bitcoin actually fell 4% in Q3. So the reason for that could be that Bitcoin has lost a little bit of its narrative as a store of value and inflation hedge. Usually the Bitcoin is considered a blue chip asset and the little bit more stable asset than some of the smaller assets in this space. But Ethereum has performed in line with Bitcoin this bear market. So that's different. We've held a bigger position in Ethereum than in Bitcoin in our flagship fund during this bear market. So that's definitely a new narrative that we have seen. Bitcoin is still unique as a potential store of value, a digital gold. Ethereum has smart contracts, and there are different use cases for Ethereum. Ethereum recovered in Q3, so both Bitcoin and Ethereum saw the bottom in June and has recovered. Bitcoin has gone sideways. Ethereum has had a bigger recovery from below the $1,000 mark that it reached in June. Worth mentioning when we look at global markets as well, that the stock market indices such as S&P and also the Australian stock market indices have actually reached new lows in the beginning of October here. But the major crypto assets like Ethereum and Bitcoin are actually held their price levels better than the share market, for example, since June. So hopefully we have seen somewhat of a decoupling there, even though there is a macro driven market for sure. Bitcoin, a final point on Bitcoin is also that there is talk about the distribution of Bitcoin from Mt. Gox. So Mt. Gox was the leading crypto exchange early on in 2014. Early in 2014, Mt. Gox got shut down. And it sounds like they are finally getting ready to distribute BTC to their former clients. So that could potentially be a negative catalyst for Bitcoin ahead.
With the idea that people might receive that Bitcoin and then sell it?
That's right. Bitcoin was trading around $1,000 at that time. Now it's at 20,000. Some people receiving those BTC might sell some, so that could put some pressure on the market. So there have been some news in recent months about the liquidators getting ready to perhaps distribute some of those coins. And
this might be a bit cheeky, but is that sort of proving that really, if you're investing in crypto, you should be in it for the long term, and maybe being locked up for 7 or 8 years is not a bad thing?
Yeah, they probably didn't feel that way when the funds got locked in Mt. Gox, but they might have done quite well not being able to access those Bitcoin. I think that's an excellent point, Tim.
Remove the temptation to take some profits along the way. And Henrik, we said that last point on Bitcoin about the inflation hedge, and that's something that we've talked about a lot since the inception of Apollo. And we've talked about also this quarter how the narrative of Bitcoin has changed from being an inflation hedge, which we've obviously seen inflation in the last sort of 6 months, and Bitcoin hasn't performed that well. So now the narrative is more of a loose monetary policy hedge, which is what was sort of driving in the previous years.
Yeah, I mean, over some time, Bitcoin has still done excellent, and I think some people are saying that Bitcoin has performed well if you look at the expectation of inflation. So different ways to look at it. I think it's fair to say that a lot of assets have done really badly this year, apart from the US dollar perhaps, which probably affect crypto assets on the negative side. But yeah, we have seen a lot of correlation, equity markets, bond markets, crypto assets, and so forth. So it hasn't been a good store of value during this bear market. That's also fair to say. We're also talking about Bitcoin as a potential store of value, and still a small and an asset that's relatively small still compared to gold, for example. So it's not there yet, even though I would guess sort of the narrative is sort of weakened a little bit during this bear market. I think that's fair to say. Some people are saying as well, and we'll talk about the Ethereum merge in a little bit, but obviously inflation for Ethereum has gone down as well. And what does that mean when you compare Ethereum to Bitcoin? I think still Bitcoin is quite unique as an asset, and I still think it's really the only one trying to be digital gold, if you like.
Great. Any more points on this side, or do you want me to move to the?
I think we can move to the next one.
Actually, just before we do, what's L2 TVL increase of 87%? What does that mean?
Yeah, that's a good point. So thank you for bringing that up. So we have seen a good increase in activity on the layer 2s, on the scaling solutions for Ethereum. There are cool things like Optimism and Arbitrum, for example. So seen really good activity there. That's really the Ethereum's long-term scaling solution, and it's really good to see that activity there is really taking off. Looking at the performance over the quarter for our funds, I think it's fair to say that we have seen a recovery during the quarter for both the Apollo Capital Fund as well as the Frontier Fund that you mentioned, Tim. They have both outperformed Crypto20, which is actually down over the quarter. Crypto20 is a collection of the top 20 crypto assets. They have also outperformed the Eureka Hedge cryptocurrency hedge fund index, which is good. Or Opportunities Fund, that's our market neutral fund. The market neutral fund has had a tough Q2. We had 2 months of negative returns in May and June for the Opportunities Fund. But we saw since then positive returns in all months. Worth mentioning as well, we talked a little bit about the Frontier Fund. That's a fund more focused on early stage projects. We don't have any BTC or any ETH in that fund, so somewhat smaller assets, more early stage, but we still offer that monthly liquidity to our investors. So we really think that's the best of both worlds. If you like, you have access to early stage deals, but we still offer that liquidity to our investors. I think in June, the Frontier Fund recorded 39% positive return. So you can really sort of, if the market recovers, you can really get some great returns in that higher risk fund as well. Anything I missed there, Tim?
No, I think that's a good summary. We'll move on to the next one.
Yeah, so we do invest in early stage deals. I think we have a quite focused investment thesis at Apollo Capital, and you can read our investment thesis on our website, apolloCap.io. And as some of you know, we have a focus on DeFi and also NFT infrastructure, as well as investing in the new multi-chain world that is emerging. We believe that the world will be multi-chain. There will be multiple blockchains. These are a list of investments we have done in the primary markets during the quarter, and you can see here that we have focused on the NFT infrastructure and also on the cross-chain infrastructure. So I think you see we have a couple of deals here in the NFT infrastructure space. We are invested in Insert Finance and NFT Perp. They're both in the sector we called NFT financialization, which is really the combination of the NFT world and the DeFi world. You can you will be able to use NFTs for obtaining yields, for speculating on price of NFTs, and so on. So those two projects are really in that nice intersection between the NFT world and the DeFi world. Magpie and Astrolabs are both building in this new cross-chain, multi-chain world where blockchains are more interconnected going forward. Pre-PO is a follow-on investment. So that's a project that we invested in a while ago, and we followed up with that investment during the Q3 quarter. Worth noting as well is that they did a public launch during the quarter, and they sold out that public launch very quickly in less than a minute. So I think that was very impressive. So we are quite bullish on that project as well.
And Henrik, to sort of provide the inside scoop, if I can call it that, for how we manage a crypto fund and the VCs type investments that we've talked about here. These are obviously 5 investments that we've made in one quarter. How many investments come, or how many opportunities come across our desk, and how many would we speak to, and how many would you sort of proceed to final stage before you make a decision? How does that process work?
Yeah, that's a good point, Tim. So we look at a lot of projects. We have new projects coming to us every day. I think it's fair to say. And as you say, sort of we can quite quickly kind of see which ones are interesting to us, that are building in the sectors that we focus on, and then we talk to a lot of projects. We have calls every week with new projects, and we only invest in a fraction of them. So I think on average we tend to do maybe 1 primary investment per month. So we might, at a high level, look at between 30 and 50 projects per month, and then we kind of narrow it down, speak to a fraction of those, and make maybe 1 or 2 investments per month. So we are being quite selective there.
Great, thank you.
But a good point, I think, is that we continue to invest in this market. We are stay disciplined, but we have invested during previous bear markets, and we continue with the same strategy during this bear market. So going over to some industry news flows in Q3. I think the big sort of crypto native event, if you like, was the Ethereum merge. That's something that the Ethereum community has been working on for many years, and that finally happened on September 15th. So just last month, the merge went very smooth, so no major hiccups. So again, Ethereum moved from proof of work to proof of stake. That means that the energy consumption of the Ethereum network went down to almost nothing, or by 99.95%. So if you hold ETH, you can now validate transaction by staking ETH and participate in the network. So no more mining. That means Bitcoin is the only big blockchain that is still using proof of work. So that's makes maybe Bitcoin even more unique, if you like. Not necessarily a negative thing. But for Ethereum, I think it's a positive thing. It also reduces the inflation a lot in the network, because the miners needed to get paid newly minted Ethereum to be able to run the mining equipment. Now you don't have the same cost associated with validating Ethereum transactions, as basically anyone holding ETH can use those ETH to stake and validate through software instead of through hardware. So in practice, that means that the inflation rate for Ethereum went down from maybe 3% to basically nothing. It could even be deflationary depending on the activity on the Ethereum network. Since the merge is only slightly inflationary, 0.15% on an annualized basis. But if you see activity picking up again, Ethereum will be deflationary actually, since they also are burning some of the ETH in the transactions. So I think that's positive. Went very well. Ethereum sold off after the merge, but that was also related to macro events. Share markets and bond market had a sort of a negative period as well, second half of September. And I think brings us to the second or third point as well when we talk about what the central banks are doing. But moving on to the second point there about the regulatory backdrop, where we've seen a number of announcements, I guess. Some of them relates to DeFi. So we have had sanctioning of the Tornado Cash smart contracts. So that's unprecedented. It hasn't happened before. US regulated basically blacklisted some of the smart contracts associated with Tornado Cash. Some people are kind of fighting that decision, Coinbase being one of those companies that are funding a lawsuit challenging those sanctions. On the regulatory front, we have also seen that there is a draft bill in the US around stablecoins and around algorithmic stablecoins on the back of what happened with UST Terra. So we'll watch that closely. What will happen on the regulatory front. And I think in general, I think there are two sides to kind of the regulatory environment. One is that more clarity brings comfort to investors in the space, to institutional like investors. They know that they can invest in an asset class that are properly regulated. But there's also, I think, a risk that that regulation can kind of stifle innovation in the space, and we have to be careful that innovation is not killed in the space, especially in the DeFi space. The NFT space is probably a little bit more secure, so to speak, from a regulatory standpoint. It's unlikely that NFTs, for example, are securities. So we'll have to continue to monitor that, but definitely some developments during the quarter. And then going back to the macro, it's been a macro-driven market, and the major trend here is that central banks are now tightening. They have increased interest rates a lot, which had put pressure on risk assets, on stocks, on bonds, and on crypto assets. I would expect that at some point, inflation expectations will start going down. We've already seen that happening. Some central banks around the world sort of have taken a step back from that tightening cycle. We have, for example, seen an extremely weak Japanese yen and a British pound. And so some of those central banks are now intervening. And at some point, I think we will see kind of at least a pause in the hiking cycle, and that will probably mean a better macro environment for risk assets.
Great, thanks, Henrik. No questions for me on this one. Should we go to the next slide?
Sure. So last week, I was in Singapore at Token2049 together with a couple of colleagues. So I think that was interesting. There was really good energy in Singapore, actually. A little bit surprising considering we're in a bear market that have lasted for close to a year now. But there's a lot of activity, both among crypto projects, but there's also a feel that there's still a lot of money on the sideline, so to speak, a lot of investors there as well as projects. We met with, I think, with 12 or a dozen portfolio projects while in Singapore. So that was really good to meet with the projects we invested in. And it's really good to see projects continue to build during the bear market. I think that's very, very important. So, I think they will do very well once the macro environment improves a bit. Those are the kind of founders we want to back. They'll continue heads down, building through a bear market like this. Another takeaway is that there's a lot of focus on the gaming NFT space currently. I think the DeFi space is perhaps a little bit contrarian now. Worth mentioning, we saw some interesting NFT type of announcements during the quarter as well from big corporations that continue to roll out NFT related projects from the likes of Tiffany & Company, Warner Music. Those are major companies in the categories announcing NFT projects. So I think we'll continue to see that. Singapore feels like it's still kind of the major crypto hub in Singapore. So yeah, well, it's really good to see the energy in Singapore.
And on that, Henrik, are people coming to Singapore for the event, or are these projects located in Singapore, or are they located in Southeast Asia, and sort of, where is everyone sort of based, or is it just global? It's just sort of everywhere.
Yeah, most projects are global. A few of the projects we invested in are based in Singapore, and we took the opportunity to meet them. Others travel there, so I think there was a mix.
Yeah, and what was the Australian delegation like?
Yeah, I think there are a lot of people from Australia. So we are continuing to see a lot of crypto activity in Australia. We have also the big crypto companies now in Australia. FTX and Binance have been, have a local presence for some time. Yesterday, Coinbase announced that they launched their retail platform in Australia as well. So good activity in Australia, and good to see a lot of Australians in Singapore as well.
Very good. I think that was it for the slides, so I'll stop the share now. We do have a couple of questions that have come through. So one was from Thomas about the BTC hash rate. So that continues to rise, and it's an all-time high. What does that mean for Bitcoin miners?
Yeah, I saw that as well, that Bitcoin hash rate is at all-time high, which might surprise people since the price it's down 61% in a year. So it doesn't necessarily mean so much for Bitcoin price as such, but a higher hash rate is, if you're a miner, means it's more competitive. So you could say that the Bitcoin mining industry is still very, very competitive. It's also interesting, what will the Ethereum miners do? They can't really move to Bitcoin because they're using a different mining algorithm than Ethereum did. Some people, some miners probably continue to mine on what is called Ethereum proof of work, which is a forked network. They might move to Ethereum Classic. But yeah, I wouldn't have expected them to move to Bitcoin because they're using different technologies.
Is that different hardware or different software or both?
Both, yeah. So the Ethereum miners are using both different hardware and software. The Bitcoin miners can only mine Bitcoin through specialized chips.
Right. So the Ethereum miners, they're hardware and software that they've paid for, they've spent capital on, might become redundant, or maybe not redundant, but there might be less sort of avenue to move over. But I think that's quite interesting in terms of the hash rate going up, where the price is sort of been coming down or sort of quite stable. Because if the competition is going up for Bitcoin mining and the price is coming down, the rewards or the revenue for the miners has come down. So you would expect that over time the hash rate to drop. And Bitcoin mining, I think, is, I remember studying economics at university, and perfect competition. I think it's quite an interesting industry where it really is perfect competition. There's sort of no, it's very difficult to get an advantage over competitors.
Yeah, in a very, very, very competitive environment, you would expect the least efficient miners to kind of drop out. So only if you're having the best hardware, the lowest energy prices, you will do well.
Question from Adam. What's the percentage breakdown of the Frontier Fund in the Capital Fund, and the breakdown of Bitcoin, Ethereum, cash, etc.?
Yeah, so if I understand this correctly, is a question about the Frontier Fund?
No, so I think Adam's after the Capital Fund. So Capital Fund, I think it's what is it? 14% Bitcoin, 15% Ethereum. Frontier.
Yeah. So yeah, we can go through those kind of percentages. Just bring it up. So in terms of the flagship fund, which is the Apollo Capital Fund, Bitcoin is around 15% or so, and Ethereum is bigger than that, so 17-18% of Ethereum. Notably there, I think we did some really good intra-quarter trades there, where we bought some liquid staking Ethereum that really recovered a lot after the merge, so made some good profits there. We expect the September month to be close to unchanged, I think, for the Apollo Capital Fund, which is a good result. The Frontier Fund makes up 22-23% of the portfolio. We still have a big cash position at 28-29% in the portfolio, and that's because we are in an uncertain macro environment. So we are kind of constantly deploying some of that cash during this bear market, but we are still kind of at an elevated cash position.
Is cash the same as market neutral? So that's
when I say cash, I mean market neutral. So still earning a return on those funds.
Yeah, and to be clear on that as well, we do have the market neutral is comprised of the investment in the opportunities fund, but there is also some market neutral activity that we do directly in the Apollo Capital Fund.
That's right.
Any other questions, audience? Please, now is a good time to send them through. We've got a couple more here. Hi, Mark. This is one from Mark. How are you positioned to balance the macro uncertainty versus current cheap market valuations? And how are you managing net exposure and position sizing?
Sure. So I think macro uncertainty means two things for us: higher market neutral exposure than in a normal market, and we talked about that. Secondly, more focus on blue chip assets, so the market leaders in various sectors. I think those two, and then it comes to kind of taking advantages of the valuations. We remain disciplined, invest in new projects, but only if it's at an attractive valuation. We invest typically between 10 and 50 basis points in new projects. Some of those we mentioned on the webinar earlier.
Yeah, excellent. I think that answers Anthony's question as well, which is, what's the valuation methodology for these new investments? There's not often a DCF on hand for these sorts of things. So how do we think about that?
Yeah, it's interesting because the secondary market valuations have come down a lot. So, there's usually a lag for primary investments in terms of the valuation. So initially in the bear market, it doesn't really make sense to be too aggressive in the primary markets because they don't look very attractive compared to the secondary markets. We think some of the founders have understood this now, and we would kind of always look, is there actually a live project that you can invest in that is actually at a more attractive valuation than some of the primary investments. And I think being able to both invest in the primary and secondary markets, that's an advantage for us, because we don't have to invest in the primary markets unless it's attractive. There are other funds out there that, for example, only invest in primary markets, and they have to deploy capital. We don't have to, and in some cases we see really attractive valuations in the secondary markets, and we're actively deploying capital in what we believe are undervalued investments in the secondary market as well. That has really come down, and we are close to the founders. We know what they're building, what they're capable of, so we don't have to only focus on one part of the market.
And Henrik, I mean, it's obviously very similar, but would you say it's pretty much exactly the same as your traditional equities? Investing in IPO prices come down if your equity markets come down?
Yeah, that's right. I think it's fairly similar to say. Yeah.
Excellent. Thanks for the question, Anthony. Another question from Tim. Tim, has there been a noticeable increase in fund redemptions as crypto markets have fallen this year? I'm happy to take that one. The answer is no, pleasingly. So one stat that I often recall is we launched in February 2018. At one stage, the fund was down 65%. And we had our first redemption in June 2020. So it's about 2.5 years later, despite that significant drop off, that we had our first redemption. That investor actually subsequently invested later on. But I think all time for the Apollo Capital Fund, we've only had about 8 redemptions, looking at probably about, I think, 300-400 investors now. So what that tells me is that people are getting in for the right reasons. It's a long-term investment. If you do invest in, I'd say, crypto just generally, and it goes down 50% and you get shaky feet, arguably crypto's not for you, because that can happen in crypto. It can also happen in traditional markets, but obviously crypto is a little bit more volatile. So answer is no, we haven't had many redemptions. We've had a few more from the Opportunities Fund and from the Market Neutral Fund. We had a couple of negative months, but I think the main catalyst there for a few redemptions has been more the yields have dropped. When we launched that fund, we were returning some months 3 or 4, or I think maybe even 5% one month. Yields are now still, I'd suggest a healthy 0.5 to 1% each month. But those early returns that maybe some investors thought might continue for a long time aren't there at the moment. They could return in buoyant markets. We would expect the yield component to increase a little bit. That's all the questions we've got at the moment. We do have 5 minutes left. Oh no, I think we've seen another one come through. No, that's done. I guess, Henrik, last question from me is, do we have a house view, thoughts over, say, the next 3 months? A bit of crystal balling. What's going to happen?
Really hard to predict over 3 months. Obviously, it's a lot of macro dependency out there. Huge uncertainty what's happening in Ukraine and other parts of the world. We do believe that at some point central banks cannot be as hawkish as they have been recently. That probably will create some breathing room for risk assets, which I think is the bucket that crypto assets fall in. But we will continue with our disciplined approach, and we will not waver from that. So I think there are still good opportunities out there.
And during the quarter, Henrik, we issued a newsletter. We have a weekly newsletter that people can subscribe to on our website. One edition of the newsletter said that you were investing personally a fairly significant amount into the Apollo Capital Fund. Obviously, this is not financial advice, but what was the thinking behind that?
Yeah, so I think, historically, this is the right time to invest during a bear market. We cannot say exactly that the market has bottomed, but over time, we are obviously, myself and the team are hugely bullish on crypto long term. I think this is a trend that will continue. So if you're thinking about, investing, this might not be a bad time, and that's my feeling. And I'm happy to put my money where my mouth is, so to speak. So very pleased to be able to do that. And you cannot advise others to do the same, but but I think it's in general not a bad idea to invest. You don't have to invest everything at once. You can do it over time as well during a bear market. I think that's usually pays off over time.
Sure. Time will tell. It's yeah, certainly an interesting to watch crypto markets as it always is. But I think we will wrap it up there. We've nearly taken up the full 45 minutes. So thank you, Henrik, for your insights. Always insightful. Thank you, audience, for tuning in. If you have any more questions about crypto markets generally or about Apollo Capital, feel free to reach out. And we look forward to speaking with you soon.
Thank you, Tim.